Starting now, Equity Mates, with thanks to our mates at Spaceship.
Welcome to another episode of Equity Mates. It is Monday, as always. I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. It sounds like you had a big weekend.
No.
Come in a little slow.
The Bombers haven't won. That was the issue.
There we go. So it's going to be a slow week for you.
Slow week, but that's okay. Look, we're here for another week of Equity Mates. Excited to kick things off this week with a conversation around the US earnings season. It's in full swing. And then we'll be continuing our week. As always, Watchlist Wednesday on Wednesday, and plenty of interesting things coming this week, including chat around the hottest commodity, which is lumber.
Yeah. It's not NFTs, it's dead trees.
It's dead trees. That's right. So Ren, today it is reporting season over in the US, and there are a number of companies who have reported, a couple of which we'll be touching on today. So let's get stuck in.
Yeah, well, the thing we love about investing, I mean, we've dedicated our life to it,
Sort of.
is that there is a fire hose of content.
Yes.
We are constantly getting more information, and it just feels like we move from one earnings season to the next.
Yes.
Especially in the States.
Absolutely. Rolling.
So we are getting the Q1 numbers. The US, most companies report calendar year, so January to December. And Q1 for them is January to March, and we're starting to get a lot of the numbers. I think about 60% of the S&P 500 have reported so far. We're going to get a lot of reporting this week. So if people are interested in this episode and want to follow along throughout the week, they'll see some of the bigger companies in the States report who haven't already. But it's been a good earnings season so far.
Yeah.
It's been generally positive.
They would be cycling, though, against the early stages of COVID from last year.
Yes.
So they're cycling against January to March of 2020. So if you're doing comp numbers and your business was affected from the early stages of that Feb-March period, and then the big plunge late March, I guess, depending on how your business operated, you might be starting to see some good numbers relative.
Now, for people who are new to earnings season or new to investing, the name of the game when it comes to earnings season is expectations. Wall Street analysts all around the world forecast what they think the numbers will be for the quarter and release their estimates. And based on all of the different estimates we get from all of the different investors, investment banks, everything, there's generally like a consensus estimate number that comes out of that. And the name of the game for these companies is try and beat those estimates. So far in this reporting season, 87% of the companies in the S&P 500 that have reported beat earnings expectations, and 72% of them beat revenue expectations. So be it low expectations from Wall Street or definitely better than expected performance from the companies, beating expectations so far. And we're going to talk about 3 companies that smashed expectations. And
it would be interesting to see if all those companies had significant improvements in their stock price.
Well, they didn't.
Yeah, which is
We're
really
going to talk about one that beat
interesting.
expectations and didn't.
Yeah. So whilst traditionally you beat expectations and you'd expect to see a good stock price, I guess, go up in value. Haven't seen it this year.
And I mean, that's the thing that, a lot of things can move markets. It can be things outside of the company's control that are happening, but it can also be things in the commentary, in the earnings calls that perhaps their numbers this quarter were better, but if there's indications that things going forward perhaps are going to be more difficult, that might move the stock down. Yeah. So just before we get into the companies, just if people are interested at home about some of the big companies that are reporting this week, Tuesday, tomorrow, Under Armour, Warner Music, Zillow, Amcor, Pfizer. Wednesday, the New York Times, Fox Corp, General Motors. Thursday, News Corp, GoPro, TripAdvisor, Viacom, CBS. Friday, I actually couldn't find a lot of companies that I knew, so I've just pulled some random names out. EW Scripts.
Oh, yeah.
Liberty Media, I actually don't
EW
know.
Scripts.
Cigna. So look, there's a bunch of companies reporting, so plenty more information to consume.
Yes. So let's get stuck in. First company that we're going to be talking about today is Apple. Of course, I think last time we spoke about Apple, they had delivered their best quarter in terms of revenue. And it seems that they have done it again.
Yeah.
90 billion in revenue for the quarter. Just to call out that Apple, for some reason, run a slightly different reporting quarter. So it is their quarter for FY 2021 finishing in September.
It's their quarter two.
Quarter two finishing in September.
Yeah.
So
No. The quarter two finishing in March, but their financial year finishes in September.
whatever. 90 billion in revenue, which, as I said, is their highest quarterly revenue of all time, exceeding their last quarter, which is pretty phenomenal. This company just continues to tick away, given the size that it is. And I guess, it wasn't too long ago that people were starting to question where Apple was going. And they've certainly been able to change their business model so that their revenue is now starting to see the effects of their services business. Yeah,
so you mentioned the services business. They also had the highest revenue of all time in Apple's history for their services business. Why did you mention services business there?
The old RR, Ren, and that is recurring revenue. Two words that all investors love to hear, and that is recurring revenue, and the services business is delivering that to Apple. So we're talking about their subscription services to Apple Pay, Apple TV, you've got Apple Care, a number of those services that they're providing that just take
iCloud, all that stuff.
iCloud, exactly. So they're able to grow the size of that business as a proportion of sales, which is good.
Yeah, so to put some numbers to it, $16.9 billion for their services business, about 17% of their overall revenue this quarter, up 27% from the same time last year, so growing. The number of subscribers, 660 million, which was up 40 million people from just the last quarter, not the same time last year, just Q1 for them. So that's up 6%. And services as a category beat expectations by 8%. You mentioned recurring revenue, incredibly important. Also, gross margin is better on the services business, nearly double. So for their products business, their hardware business, Apple enjoys a 36% gross margin. On their services business, it's 70%.
Yeah, right.
So more money flows to the bottom line. It's recurring, and really, if you're in the Apple ecosystem with buying their hardware, Apple's challenge is then to find ways to monetize that when you're living in their ecosystem.
But what is interesting is that last year, services revenue made up, from memory, about 22% of total revenue, whereas for this quarter, it's back down a bit to 17.5%, 18%, which I guess leads into the next conversation around what's happening with their product side, and it is booming.
It's booming, yeah. Everyone knew that the iPhone 12 would have an effect on their hardware business. Like a lot of people upgrading their phones, and which has played out.
Yeah.
But less expected was the boom in all their other products. Mac sales up 70%, iPad sales up 79%. So the hardware business is doing incredibly well.
Yeah, you would think driven by this continued rise in work from home and all that sort of stuff, I would imagine. But yeah, Mac sales up 70%, you wouldn't have picked it.
No, although you are looking to buy a new Mac, so...
I am.
So let's move on, because I'm mindful of the time, but one final note. Apple made $90 billion revenue in the quarter, and they also announced that they're buying back $90 billion worth of stock in the quarter. And they also raised their dividend by 7%.
Wow.
It's good to have a few hundred billion of cash on the balance sheet.
So, Ren, let's move on. That was Apple, another stock that is always, in anticipation when it comes to reporting season, and that is Tesla. For various reasons, everyone is sitting with bated breath, either the shorts hoping that we see it come out with an awful report, or those that are incredibly long. But Ren, it's good
Or
news.
some of us who just want to create content around Elon Musk.
True. But look, good news for Tesla overall. Record production and delivery numbers. They grew their vehicle sales by more than 100%.
Yeah, the
over
unit
the last
sales.
year. Yeah. So unit sales of Tesla are continuing to grow, and we know that they had their production issues a number of years ago, but Elon has managed to overcome that with his gigafactories.
Yeah, although they are facing into another production issue, not related to them, but we'll get to that in a second.
So revenue as well from energy generation and storage, another part of their business, has nearly doubled versus the corresponding period as well. So good news for Tesla.
This next point is one that we had to Google to confirm because we were surprised by it.
Yeah, the Model 3 continues to be the best-selling premium sedan in the world. Now, I'm still unsure about this point. I'm still unsure. It's going up against the likes of Audi, BMW, the Audi A4, I think, and the BMW 3 Series, the Mercedes C-Class. Like, these are all cars that you see a lot more of on the road. So
I guess Australian roads probably aren't a representative sample.
Yeah, I'm surprised.
Yeah,
I'm surprised. Yeah, best
it's a surprising company
selling premium sedan in the world. But there you go. And Tesla is forecasting that the Model Y is to become the best-selling vehicle of any kind globally.
Which is
classic call from Elon. Yeah, classic call. We can make a call like that for equity, mates. It'll be the
biggest
most
podcast in the
podcast.
world. Yeah.
But anyway, look, they're doing well.
They are doing well.
Yeah.
From their automotive business, their revenue was $9 billion for the quarter, up 73% from the same time last year. But down 3% from the final quarter of last year.
Yeah, right.
But they beat expectations. Net income of just shy of $500 million also beat expectations. You'll like this. They sold a bit of their Bitcoin holding and made $101 million in the process.
I actually don't like that because
you want them to hold?
Well, the time that he was selling, it's just he was obviously selling into a period when he was also pumping the price of Bitcoin. But anyway,
yeah, they claim it was to test the liquidity and to prove that it was liquid enough to hold.
Right. Okay.
Yeah.
But anyway, they did well.
One key thing to watch with Tesla, we mentioned they've overcome some of their supply issues, but they're facing into other ones. This microchip shortage is a really interesting trend to watch across the car industry. General Motors reporting this week. Interesting to see what they say as well. But Tesla had a real challenge with the chip shortages that the whole industry is facing. They're pivoting to microcontrollers, but that's just a trend that is playing out, and the industry is really struggling on the back of.
Interesting.
Yeah.
So stock price dipped 3% after reports. So there we go, despite beating expectations by 18%. But Ren, to close this out, let's move on to Amazon, one of my favorite companies.
Honestly,
in the world.
after this report, how could it not be anyone's favorite?
Yeah,
it
just continues to grind upwards in some phenomenal fashion. Overall revenue up a respectable 44%, 44% to 108.5 billion for the quarter, which is again beating I'm pretty sure it beat its last quarter, which was a record. I think it was the first company to hit $1 billion in revenue, 100 billion in revenue for a quarter. So it continues to grind.
No, I think Walmart would have done that.
Oh, really?
Yeah.
This is a fiction show.
We'll take that offline. Amazon Web Services continues its just march upwards, up 32% year on year. This was interesting. So the other category, they don't split out their advertising revenue, but there's a lot of talk about how much advertising spend is being directed to Amazon now, because you want to win that search.
Yeah.
So while they don't split advertising revenue out, their other category was up 77% year on year. So that's going to be an interesting trend to watch. Is Amazon going to join the Facebook and Google duopoly on the digital advertising game? It's probably got a fair way to go, but it's an interesting one, because if you win that Amazon search, you're done. That is worth its weight in gold.
200 million Prime subscribers, Ren, 50 million more than the start of 2020. I actually don't know where to sit on that number, because if you compare it to like Disney and Netflix, it's pretty in line, but then you compare it to like an Apple and it's only a third. So,
Still.
given they're trying to play in many different spaces, but can't complain with 200 million.
Speaking of Prime, here's a stat for you. So with Prime, you get 2-day shipping, all of that. You also get Prime Video. Streaming hours are up more than 70% year on year.
For Amazon
for Prime
specifically?
Video. Yeah.
Wow. Well, I think this year is the year that we're going to see the Lord of the Rings show come out that they've spent 800 million on for the first season.
Oh, no way.
Yeah, for the first season.
Wow.
Yeah. Anyway, look, their international revenue is growing faster than their American business, but their offline business is a little bit weaker than forecast.
Yeah.
With revenue down 16%.
Down 16%. And for people who are unfamiliar, Amazon have some physical stores, Amazon Books, Amazon 4-star, but the jewel in that crown is Whole Foods markets. So yeah, a bit weaker offline.
Yeah.
Yeah.
So look, overall though, Ren beating expectation by 4%, earnings per share $15.79, beating expectations on that one by 66%. So again, look, Amazon, you can't look past this company, I don't think. It's just going incredibly well.
It's going incredibly well. So Jeff Bezos is stepping down either in the third quarter or at the end of the third quarter, and just stepping down. He's just remaining chairman. It will be interesting to see what they can deliver with his final 2 quarters as CEO.
Yeah. And then how his Blue Origin or whatever his space company does goes from there, because I know that his childhood dream was to be fully invested in space, and Amazon's been his vehicle to get there. So
yeah, right.
if his attention turns there. But anyway, we've run out of time. It has been great to be back for another week here at Equity Mates. If you'd like more information on what we're doing in the podcast scene, head to equitymates.com, or you can email us at contact@equitymates.com. Otherwise, Ren, tomorrow we've got a bit of a deep dive on what's going on in the Australian market, and then we have Watchlist Wednesday.
That's it. We're joined by some big experts this week. Jess Amir from Bell Direct, Henry Jennings from Marcus Today, and then we're going to close out the end of the week talking about this commodity price boom that we're in, and how lumber is the hottest commodity of 2021. So big week at Equity Mates. Bryce will get over the fact that Essendon lost.
Yes.
So make sure you join us same time, same place tomorrow.
See you then.
Equity Mates, with thanks to our mates at Spaceship.